What is going on, ladies and gentlemen? Welcome back to another day, another dollar. Here with me, Chris. We're going to be breaking it down once again, looking at the E Mini. Have rolled over to the September contract. We have a lot to discuss, and I'm going to try to make it as quick as possible. We're just going to go over the 30-minute time frame today and the daily. We're not going to go any further than that because there is a decent amount to discuss. Um, Overall, I did poor today. I did something that I haven't done in a long time, and I caught myself after the fact, and I knew exactly what happened. I ended up taking a pretty hefty loss today. Lost everything that I made last week in one trade. So hopefully you guys can learn from my mistake and not do it in the next event, such as uh, the Fed minutes. Fed's, PPI came out this morning, pushed the market up. Uh, Not a whole lot occurred the first few hours or the first half hour of the morning. Pretty small range early on, and then we were waiting for the main event to happen when the Fed minutes came out later at 1 o'clock Central, 2 o'clock Eastern time. And basically, the Fed did not do anything this time around. And then we got this big flush uh, in the late in the day, only to find a bounce out of the upper distribution from this day back on Monday. So we held that upper distribution, got rejected out of it, filled that gap, held the upper distribution from that day, and pushed up, filling the large set of single prints that we had. Honestly, looking back at it, not a bad risk reward, a long trade there. Definitely could have taken it. However, with the FOMC and everything going on, and Jerome talking, you don't know how these markets are going to react, and it's hard. It's kind of hard to have a known risk, right? Because this market could flush real quick, stop you out, and then pop just kind of like it did later in the evening. Early on in the day, though, we did one time frame, keep the one time framing up on the daily, taking out the previous day's high, attempting to go trend, didn't hold it. Each push up was being sold into. Very tough level. Once we got up to the 44.40 level, we pushed up into it. There was a high volume wedge on the larger weekly time frame, right around in that area, and we basically sold off. I actually had bids looking for the afternoon pullback low early on in the day. I was looking for the pullback. And let me bring up my destinations here. I was looking for the pullback in F period. I got filled on part of my position. I had more on the way down around the 23 area. Kind of, wanted to see a little bit of a test here. And it bounced up a little bit because I got filled initially 26, a 5 lot, and then had it gotten 23, I would have gotten filled more. So it pushed up a little bit. I could have taken off part of the trade for like a 2 point gain, but I was expecting, usually with an afternoon pullback low, you can see typically go and test the high again, right? That was not the case as, I guess I should have been anticipating the sell off going into the minutes coming out. But however, on this pullback in H period, I got filled on the rest of my contracts. I was long 20, uh, long 20 around the opening. I had my stop 2 points below the open, and I was looking for a good little bounce up to get back to the points of control, which at the time was at E's low. So we had a point of control that was, I'm about to highlight right where. We had a point of control that was right in there. Ended up, holding there later in the day, and we ended up coming up back to it. However, I was looking for, before the minutes come out to get a little bit of a short covering, push back up into this area, and I would have made really decent on that 20 lot. Average price was at 21. So it pushed up. I could have taken off for, a small 2 point gain once again on a 20 lot. But I had a feeling that if this market seen that there was going to be no Fed, no interest rate raise, this time round, this market would do the opposite of what J period had going on. Normally, I close out my position beforehand, but this time I decided to do what? Gamble. And that's absolutely not what I'm supposed to do as a trader. I could have gotten out of the trade for break even or even just a little bit of a profit prior to the FOMC or prior to the minutes. And instead, I decided to stay in the position, be hopeful, gamble because I had a bias. And due to that, I ended up taking that loss, pretty good loss on the day. It stopped me out, and I was down pretty good on that push down in J period. And then I fought back a little bit on pushes up, shorting against the set of single prints in J period. Kind of took back a few of those points, scalped a few of those points back, but still overall ended up with a negative day, which is not what you want to see as a day trader, especially in this type of environment. I should not have been trading. I even said in yesterday's video I most likely would not be trading. But we did get that liquidation break in J period, pulled back, got the 10Y point of control, kept on going, got that afternoon pullback low. And you see how these became destinations and targets to fill. So after getting that 10 wide, we got that afternoon pullback low. After we got that, guess what the next target on the algorithm's target was? 43.96, low of day where the gap started, and they got where the gap filled. Now, this was the upper distribution from Monday. We dipped our toe in it and got rejected. You could have taken the long in K period, seeing that we were kind of rejecting after filling the gap, right? Seeing that we were kind of rejecting that upper distribution, you could have taken the long, put your stop right below J or right where the single print started at 80.75, and looking for the single print fill. So you get long right around 95, and you're looking to take profit at the single print fill, which was 14 or 13, right? So from 95, you would have made 20 points on that long. And I was thinking about doing that, and it would have worked out really well had you taken that long. But, I had taken my loss, I accepted it, and didn't want to be revenge trading. So really good opportunity there to take the long position against that J low and that where that single print started at 38.75. However, obviously, once you hit that 43.80.75 level, you definitely would have gone and filled at 43.76, but this market just didn't have it in it. Attempted at an outside day down, failed, and put ourselves into a 2-day balance by taking out the previous day's low, filling that gap. So overall, really messy day, ugly day for anybody that was on the long side early on and stuck to their positioning. And then, of course, shorts got ripped if they were shorting near the bottom. So tough day for people all around. Tough day for me. Shouldn't have traded. However, it takes lessons like this to learn from. So let's go ahead and mark our destinations and get on to the daily. So we now have our high of day here and yearly high right here at 39.50, 44.39.50 is our high of day, yearly high, that is. We'll mark that. Do not have a wide enough point of control. I don't think. 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 7, 8. Yeah. So only 8 wide. Nothing real significant. We won't ignore it, but we will not mark it. No afternoon rally high. No afternoon pullback low. Just the day's high and the day's low is what we'll have. Let me get rid of this high of day here because that's where the gap filled. And then let's mark our low of day. I'm honestly kind of disappointed in myself. Had I not taken the loss on that long position up here, I definitely would have taken that long in K period. Or at least attempted a smaller position size long there. It was, very good risk reward opportunity, and I just did not take advantage of that. 43.83.50 is the low of day. low of day. We'll mark that. And now we have our destination. So if we open up inside today's range, very large range, if we open up inside today's range, you can expect a pretty good amount of chop until we come out of the area. As it is, we're going to call it a 2-day balance, and this day being the entirety of the balance. So if we get up to 44.39.50, you can expect sellers to attempt to defend that area. If, however, we can't take it out or even push up near it, you'll rotate to the lows and attempt to take out 43.83.50, which will be our balance low area, and you'll see shorts cover or buyers begin to step in. However, if we take it out, if we take out the downside, 43.83.50, you will go into the single prints that start at 43.80.75 and fill at 43.76. And then the next set that start at 43.74.50, fill at 43.68.50. Next, on the upside, today's high, 44.39.50. And then above that, you don't have anything really until the 44.50 area, which would be kind of a visual level to kind of watch out for. So other than that, that is your destinations. Let's go ahead and look at what our daily time frame is looking like. So here's our daily. Could you say this is a 3-day balance? You could. I'm going to call it a 2-day. You could encompass this whole thing and say it's a 3-day. But, you know, I want to see, I think we'll consolidate inside this range from today before making a decision if we're going to continue to go up higher or lower. If we do come out of balance to the downside, we'll most certainly, in my opinion, most certainly be coming out of balance to fill this premium gap right here. Let me mark these balance areas real quick. 44.39.50 is our balance high. So there's our balance high. Our balance low is now going to be 83.50. Or 83.50. Oh, I miss 43.83. Goodness. You didn't see that happen. So there's our 2-day balance. That's what we're looking at. Could you, like I said, encompass this whole thing, make it a 3-day? If you come out balanced to the downside, you will fill the premium gap. Yes, you can do that. But for me, I'm going to call it a 2-day balance. Looking to either take out the 44.39.50, today's high, and keep on trucking to the upside, or take out the day's low at 43.80.50, fill this the single prints from these trend day here, and get into that premium gap back from Monday. With that being said, ladies and gentlemen, hopefully you guys followed along. Don't trade your bias on FOMC minutes or anything of that nature, any event. Try not to have a bias. Stay out until let the algorithms settle down. That way you can have a better gauge of what the market is trying to do and not miss out on opportunities like I did in K period, right? That long was a great opportunity to get 20 points out of the day easily. So hope you all have a wonderful day. If you traded bad, let me know. If you traded well and made a lot of money, let me know what you did, where you took the trade, and see if it lined up where I was looking to get long. So have a great day. Catch you in the next one.